All right, let's talk about something that's quietly working against your financial goals every single day. Inflation. We're going to break down what it is, exactly how it hits your wallet, and then walk through 7 proven ways to fight back and really secure your future. Okay, let's get into it.
So let me just start with a direct question. Is your money secretly losing value right at this very moment? For pretty much everyone, the answer is a big fat yes. And look, this isn't some boring economic theory. It's a real force that's chipping away at your savings and your ability to build real wealth. You know, the source material we're digging into today calls inflation the silent killer. And honestly, that's a perfect way to think about it. It doesn't just rob you overnight. No, it's sneakier than that. It just slowly, quietly eats away at the value of your money, meaning you can buy less with it this year than you could last year. It's exactly why a dollar today is always worth more than a dollar tomorrow. To really see just how devastating this silent killer can be, let's look at a real-world story. This isn't about boring charts and graphs. This is about someone's life goal and how inflation can just totally dismantle it without them even noticing. So this is Nina. She is a super disciplined investor. She has a very clear goal: build a nest egg of 1 crore rupees in 20 years. And she's doing everything by the book, investing 10,000 rupees every single month, expecting a pretty solid 12% annual return. On paper, her plan looks absolutely perfect. And after 20 years of staying consistent, check this out. She basically nails her goal, stacking up almost 1 crore rupees. I mean, that's a huge accomplishment, right? It's the result of 2 decades of financial discipline. This is the number she's been dreaming of seeing in her account. But, and this is the most important question, what can that money actually buy? The number sitting in your bank account is one thing, but what it can get you in the real world, well, that's a whole different story. This is where the silent killer gets to work. After we factor in an average inflation rate of just 6% a year, the actual purchasing power of her 1 crore rupees gets slashed to just over 31 lakhs in today's money. Yeah, you heard that right. Inflation basically vaporized more than 2/3 of her wealth. Her 20-year dream was cut down while she wasn't even looking. This is exactly why you can't afford to ignore inflation. So how do you stop this from happening to you? Well, you need a defense plan. So let's break down a 7-point strategy to protect your money and make sure your wealth doesn't just grow, but actually holds on to its value. Okay, here's the full game plan. Now, to give each one the time it really deserves, we're going to zero in on 5 of the most critical pillars here: investing in the right stuff, growing your income, budgeting the smart way, developing your skills, and building that crucial safety net. This is your core playbook. First things first, you have to invest in assets that can actually outrun inflation. Your money has to grow faster than prices are going up, period. A great rule of thumb is the 50-30-20 allocation. So think of it like this: 50% in growth assets, like stocks, to chase those higher returns, then 30% in more defensive, stable assets, and a really critical 20% in alternatives, like gold or real estate, which tend to hold their value really well when inflation is high. All right, next up, don't just rely on one paycheck. Seriously, your free time is one of your most valuable assets. You've got to turn those extra hours into productive income. Whether that's freelancing, building a digital course, or starting a side hustle you're passionate about, creating multiple streams of income gives you a powerful defense against rising costs. Now, this slide points to a fascinating little psychological trap we all fall into. It's called Parkinson's Law. Basically, it means our expenses magically expand to eat up whatever income we have. You get a raise, suddenly you need a new car or a bigger place. To fight this, you have to budget smart. And the key is to automate your savings. Pay yourself first, before you even get a chance to spend that extra cash. Strategy 4 is all about learning so you can earn more. Your income is tied directly to the value you bring to the table. And this idea, inspired by the compound effect, is just so true. By consistently investing in new skills, even just a tiny bit every day, you dramatically boost your earning potential over time. Look, inflation never sleeps, so your skills can't eat. Okay, this one is absolutely non-negotiable. You need an emergency fund. Unexpected stuff always happens. A job loss, a medical emergency, you name it. Having 6 to 12 months of your living expenses tucked away in an account you can access easily is your ultimate safety net. It's what lets you manage debt smartly and stops you from having to panic sell your investments at the worst possible time. Okay, so we've covered the tactics, the what to do, but that's only half the battle. Just as important is the how to think. Winning the long game against inflation is as much about your mindset and your behavior as it is about spreadsheets and numbers. This insight, inspired by Morgan Housel's awesome book, The Psychology of Money, just nails it. Your financial success is way less about what you know and way more about how you behave. Developing an inflation-proof mindset just means building up that discipline, that patience, and that long-term view, especially when everything feels chaotic.
Let's just put it side by side. On one side, you have the typical emotional reactions. You panic sell when the market dips, you hoard cash that's losing value every day, or you spend money just because you're afraid of missing out. Then on the other side, you have that inflation-proof mindset, the discipline to stick with your plan and the patience to think long-term. Your entire financial future really depends on which side you choose to be on. So here are the traps you have got to watch out for. Lifestyle inflation, upgrading your life just to keep up with other people. Letting way too much cash just sit there losing value in a savings account. Ignoring those little daily expenses that slowly bleed your budget dry. And of course, not investing time in yourself to grow your skills and your income. Seriously, avoiding these is half the battle won. All right, we have covered the problem, the strategies, and the mindset. Now it all comes down to putting it into practice. It is time to go from just understanding this stuff to actually doing something about it. And just remember this, the goal here isn't some one-time fix. It's about building small, consistent, smart financial habits that just become a part of who you are. That is how you build real, lasting wealth that can handle whatever the economy throws at it. So, I'll leave you with this final thought. Looking at everything we've covered today, from diversifying your investments to learning a new skill, which single strategy are you going to commit to starting today? That first step, no matter how small it feels, is always the most important one you can take.